Hello and welcome to a brand new episode of Smart Money. Now, the India Energy Week 2024 was in focus, where India has invited investments from global leaders in the energy transition space. Prime Minister Narendra Modi said that India is investing in energy like never before to ensure affordable energy for the future. Remember, India is the world's third largest energy, oil and LPG consumer. India is also the fourth largest LNG importer and refiner, along with the fourth largest automobile market. The Prime Minister also underlined rising demand of electric vehicles in the country. Now, at the Energy Week, Prime Minister Modi said India will see $67 billion of investments in the gas sector in the next 5 to 6 years. So how do you as an investor take part in this large opportunity? To answer that question today, I'm joined by Gandhi, who's the fund manager at SBI Mutual Fund, who's right here with me in the studio. Hi. And Ruchit Mehta, who's the head of research at SBI Mutual Fund, who's joining us on Zoom. Ruchit, thanks a lot for being with us. In fact, to both of you, this is a big theme, right, that the street is talking about. Stocks have done very well. So, Ruchit, let me start with you. Why is the energy theme looking so attractive from India's point of view? And what are the growth expectations of the energy sector over the longer term?
Sure. Thank you, Sonia, for having us on the show. I think if you look at the energy sector's demand prospects, right, this is a sector which over the coming decade will see an increase in demand from a consumption standpoint. There are two aspects, right? One is that increasingly over the last few years, we have worked as a nation towards enabling energy for all, which means having access to 24/7 electricity, having access to piped natural gas or LPG gas cylinders. And at the same time, we've seen that as income levels have gone up, consumers are upgrading their lifestyle, right? So, from having one gadget at home to multiple gadgets to, like, for example, it's quite the norm in large cities to have a house which is fully air conditioned with all gadgets that are there. Now, as you upgrade your lifestyle, you're going to require a lot of amount of energy. And therefore, we think that India is going to be a secular market from an energy demand growth standpoint over the coming decades. Now, there are third-party estimates which tell us that India's energy demand can continue to grow at a 2 to 3% rate annually for the next 3 odd decades. But within that, as we shift more towards the greener or the renewable side of energy basket, that can grow at a much faster pace of close to 6 to 7% as well. So I think for us, we're seeing that this is a sector which has very solid long-term growth prospects. And coupled with the fact that it's got reasonable valuations compared to where a lot of other sectors are in the market, it looks like an interesting investment opportunity.
Okay, it looks like an interesting investment opportunity. So, everyone's talking about new energy, right?
Sure.
The renewable energy, etc. But then there's old energy as well. So I wanted you to come in on it, Raj. What is old energy? What is new energy? And what do you exactly mean by transition?
So, largely old energy is somewhere where the carbon trail is much higher, the carbon footprint is much higher. And new energy is somewhere where, the carbon footprint is not there. So it's largely renewable sources like solar, like wind, hydro. And on the fossil fuel side, which is traditional energy, you have coal, oil. So, from a transition perspective, what it means is that we want to arrest the global warming, which is where, GHG emission, carbon emission needs to be brought down. And energy sector is amongst the major contributor to the carbon emission globally. So the transition essentially is that, you move from a carbon footprint fuel to a fuel with not much of carbon footprint. So that's essentially the energy transition that all of us are looking at.
So Ruchit, come in on this, right? Because this new energy space is something that everyone is very interested in, whether it is renewable energy, whether it is electric vehicles. And there are a lot of stocks under this umbrella as well. But we've seen these stocks run up quite a bit. So just explain to our viewer how, if you want to sort of take that decision to invest in new energy, which are the spaces where you still see value as well as growth opportunities?
In fact, it's quite interesting that a lot of hype has been there on the new energy side with a select set of small companies which are predominantly only on the new energy side or kind of almost like a startup. But we find it also interesting that actually it is the traditional old energy companies itself which are going to be either investing aggressively on the new energy side of it because of their transition plans, or already are large players in the new energy side of the play. If you look at our solar power auctions that happen, right, regularly you will see traditional thermal power companies also participate and win these auctions equally as much as startups or pure dedicated firms are. So while yes, there are a bunch of new energy companies out there in the market, but we think it's a lot more interesting that you have the old energy companies also which are aggressively ramping up on that side, and therefore they can be also over a medium to long term be themselves be a new energy firm itself.
Okay, that's interesting. But what are the risks that we're looking at, right? In terms of energy transition, there are incumbent companies, there are old energy companies that have put up a lot of plants, etc. So there will be, of course, that cost attached to it as they make that transition. So what are the risks that we're looking at, Raj?
So here, if you see globally, the expectation is by 2050, through 2050, there will be gradual decline in the oil and gas consumption. It will be taken over by renewables. So there is a risk from the absolute pie available to you coming off. But against that, what we see is let's say if oil consumption is expected to decline by 1.5–2% CAGR, but against that the natural decline of oil production is 3 to 4%. So some of these resources, even to just be where we are, we want to transition to net zero and not to stone age. So there is a kind of investment required here, and which is where there is pockets of opportunity available. Also, what happens is that for a commodity, what essentially matters is where you are on the cost curve. So for a lot of these traditional energy companies, the advantage they will have is India is most competitive on the new energy. So be it solar tariffs being just at 2.5 rupees. So on thermal itself, which is fossil fuel, today if you see for a new plant it requires 5.5–6 rupees. We have solar tariff at 2.5–3 rupees, which is amongst the lowest in the world. We'll have round the clock power, which will be, if you see the recent bids, just at 4.5. So what it does is that, when the entire fossil fuel basket has to move to net zero, they have to decarbonize. The cost essentially for the Indian companies will be the least. So you will have them move up the cost curve on the traditional business. On the refining side, let's say, in the traditional business, you require for every 100 units that you refine, you need about 3 to 4 units of hydrogen. And in the new energy era where you need green hydrogen, we are seeing the Ambanis of the world and talk of $1 per kg of hydrogen in India. So you have the cheapest delivered cost of hydrogen to you, which is where again, so across lot of sectors in a new transition world, you will see India moving up the cost curve, and which is where we see even the traditional energy being placed very favorably in such a scenario.
Okay, you were telling me that you've been tracking the oil and gas space for over, what, 18 years now?
Yeah.
We've seen a big boom in some of these oil marketing companies, right?
Sure.
Most of them are sitting at fresh highs. I want to understand the story there. I mean, is it, what is leading to this rally?
Sure.
And what do you see as the way forward for the sector?
Sure. So, what we are seeing here is that, versus the fear of them being bucketed as traditional energy and question mark on the profit pool. Some of them were pricing in negative growth, with low single digit PE there. So, what we are seeing quite conversely is, in fact, the profit pool is growing there because we are seeing reforms happening across the space. There is underinvestment across, like refining. If you see last 1 year, GRMs are double of what they are over 10 years. So there is underinvestment plus policy making resulting in growth in profitability. And the profitability is becoming much more predictable in terms of, let's say, ONGC historically had just $55 to $60 realization. It is now having 75. Subsidies were decided at the end of the year. Now you have every bi-weekly windfall taxes being there. So but there is a fair bit of certainty coming in there. And which is where, where you have growth combined with lesser and volatility, more predictability, you will have a market rewarding that. So which is what we are seeing. And in leg 2, which is where, we are quite excited on the fund, that leg 2 will happen when the fossil fuel energy money, which is, growing, is then put to use on the new energy side. So we've had NTPC say that, by 2032, they want their green energy portfolio to be equal to fossil fuel. So, which is where what you are seeing essentially the leg 2 of value creation, where you take benefit of new energy that India has and kind of transition your business out. And so that will also further enhance value.
Okay, well, let's do one thing. Let's take a short commercial break on that note. Don't go anywhere. We'll continue our discussion on how you can benefit from this huge energy transition that our country is seeing, and what are the companies, or rather the pockets, that you need to be looking at in your portfolio. More on that in a bit. Welcome back to Smart Money on CNBC TV 18. The big focus area for the government is energy transition, and we are here talking to a bunch of people from SBI Mutual Fund about how you can sort of benefit from this energy transition. Raj Gandhi, who is the fund manager at SBI Mutual Fund, and Ruchit Mehta, the head of research at SBI Mutual Fund, are with us. Ruchit, we were talking about whether the sector is prone to any risks from a regulatory angle, right? That is the other big question, because we've seen over the past, if you map the last decade or so, a lot of these companies that are PSU companies have not given the best returns. Of course, now the last 2 years are different. But if you just look at in hindsight, is there any regulatory risk that we're staring at?
Sure. I think energy sector per se, because it involves a lot of aspects such as energy security, something at a national level rather than merely at a consumer level, will always be prone to some or the other regulatory hangover, right? So one cannot truly rule out government intervention at any point in time. But mind you, this is not something that's unique to India per se right now. Globally, you've seen a lot of moves by governments to sort of make sure that energy prices don't go haywire. Like we have a windfall tax, it's something that a lot of countries have implemented. But as Raj also mentioned, and an important aspect is that the government has moved away a lot on the reform side for the sector. If you think of it simply, right, earlier we used to subsidize consumption. Right? You would have petrol and diesel prices being sold below what the market price should be, and the government giving a subsidy. Whereas now the government is actually thinking of, rather than giving consumption-led subsidy, to more investment-driven subsidy. Right. So you're talking of the PLI for the solar panel work. The finance minister spoke about allocating 10,000 crores for the hydrogen sector. So is a change in the way the government seems to be approaching this sector. So I think it is moving in the right direction. There will always be that small chance that somehow if energy prices go haywire, or if there are national security concerns, then some bit of heavy hand for the government could come through. But we would anticipate it to be more temporary, like we saw in the aftermath of the Ukraine-Russia war, rather than it being a sort of a permanent policy change that's there.
Okay. You want to comment on this? Yeah.
Yeah, so this is quite interesting. So here, we've seen power and oil and gas being, hit a lot of times with policy risk. However, to due credit to the government side, it's always been a forced error kind of a situation wherein all of a sudden you have oil price doubling due to war somewhere, gas prices spiraling. So what we've done here is, as and when you move to more renewables, which is captive and domestic driven, so the external turbulence which we see in a forced error kind of situation will automatically structurally come off for the sector. Also, what we've done, if you see across, kerosene consumption, which at peak was 40,000 crore of subsidy. Today, our kerosene consumption is just a fraction of what it was, because all was going to adulteration and we've stopped that. On LPG connection side, what we've done is through digitalization, we've ensured lesser leakages. Earlier, on your name, maybe you were using 4 cylinders and the agency was taking off 12 and selling to the hotel and commercial space. Now you pay full price for the cylinder, the subsidy comes straight to your account. So we've cut down with digitalization, we can see a Zomato app being there, but a lot of these sectors which are benefiting, but they don't come as apparent. But what we've done is that, through reforms, we've cut down the systemic risk here. Today, the petrol that goes in your tank has 15% ethanol, which comes from local sugarcane. So it kind of, to that extent, you are lesser impacted. On the railways, we were importing oil, refining that to diesel and using, whereas power is produced captively. So we've, from 2014 to now, we've doubled the electrification on the railway side. So I think what we've done is that, along with top-down measure to kind of take frequent price hikes and, control subsidies, we've done a lot of bottom-up work as well. And also what is interesting is that, the new, when we speak in Delhi and all, when we do our checks, it comes out very apparent they are aware of the political vote bank that a new energy has. Imagine lakhs of acres being bought and money in the pocket of the people. So it is a big boost to the economy.
Absolutely.
Today that money was going out and, not available for us as a sector, as a profit pool here. Now you will be capturing that profit pool here. It's money in the pockets of the people. When we do hydro in Northeast, we get renewable power, cheap power. Plus, let's say you control the flooding in Bihar and UP, parts of UP that you have every monsoon. You can control the flow of water. So, imagine the kind of vote bank any party can have if you say that, we've kind of controlled the flooding. And also I think there is a lot of economics as well as positive politics as we transition, which is where we feel, the policy environment would be much more supportive versus.
Okay, so the big question, right? Can India really attain leadership in the new energy space? And within the listed universe as well, what is the kind of opportunity that this presents? Ruchit, you want to take that?
I think for us, we have a large capability on the solar side of it, and that will be good for us to sort of build scale capacity here, and that can be used towards some of the newer fuel technologies such as hydrogen, right? Because I mean, to generate hydrogen, you need a lot of electricity as well, and coupling that with solar makes it green hydrogen. And hydrogen as a fuel can be transported globally in different forms. So I think if we do it correctly, then over the coming decades, then one can be a global player on that side of it. And that's an interesting area because you're seeing investments happen across all of the traditional energy companies, right? Being the oil marketing companies or the large refining and marketing companies. Everybody seems to be investing in some form or the other manner on the hydrogen value chain.
Okay, before we wrap, we're running out of time. I want to talk about a couple of more themes, but before that, you folks have an energy fund as well that's coming out, right? Sure. But my question to you is this, that at a time when there are many such funds like this in the market, this is a space that has sort of become a bit cluttered now, a bit well discovered as well. What makes your fund stand out?
So, as we stand today, there is no single pure energy fund. If you see the other peer set which is available, it's much more diversified in form of it being a more natural resource play with lot of metals also in it, it being more power plus infra. So, it has a lot more of cement and chemicals and lot other sectors. So, in terms of having an exact peer set which is pure dedicated to energy sector, probably we would be the only domestic fund here. Available, yeah. Okay,
that's interesting. But the energy index has been an outperformer, right? So do you expect this kind of performance to continue?
So, despite of it being an outperformer, what we've seen is that profit pool has also has come in. So, in terms of valuation, when we see, it's still reasonable versus where the market is. So, on December ending trailing basis, if you were to see, energy index is still at 25% discount to the benchmark. And X of Reliance, which is a more heavyweight, the overall headline valuation across the sector is still reasonable. And where you have a complete new sector emerging, like how we are transitioning. In fact, it is a proud moment for us that climate change index has ranked India amongst the best in the G20 countries in terms of taking action on the climate change. So I think given where we are headed, given the advantage that we have, the valuation seems fairly reasonable given the potential.
Okay, just a couple of more minutes left. Ruchit, you want to wind down with any closing remarks on what the kind of opportunity is that investors have in this sector?
Sure. I think, if I were to pitch it to a customer, look, you have a sector which has fairly good long-term growth potential. You have a sector that's going through a fairly interesting transition period where not only will the sector see new players emerge, but also the incumbents will be able to play a significant part of the transition that's there. And as Raj mentioned about it, valuations are in your favor, especially considering where a lot of other sectors are trading at and the general market itself is trading at. So I think you've got a combination of good long-term growth and reasonable valuations in your favor.
All right, gentlemen, thanks a lot for joining me on the show. It was really a pleasure speaking to you and understanding what is the opportunity that we have in terms of energy transition.
Sure. Thanks a lot for having us here.
All right. With that, it's curtains down on this edition of Smart Money. Thanks a lot for watching.